Welcome back to my channel for another video. So here you are back in the kitchen, and I know what you're thinking. Why has he got a jacket on? It's bleeding freezing it is. I'm not joking you, it's like 3 or 4 degrees. Absolutely freezing. So that's why I've got the coat on. And anyway, it's been a while since I've done a video of actual trading. The last few weeks has been a couple of different things. I did say I was going to do some different things, and that's what I've done. So here we are again, back trading the Dow Jones on the close of the Dow Jones. Lovely return, £539. And again, this is the great thing about my strategy and my approach to the market, is that you can trade all these different times. You can trade the European Open, you can trade the US Open, and you can trade the US close. So Dow Jones on the US close. So before we get into the trade, guys, make sure that you smash that like button. Make sure that you subscribe to my channel for more videos like this. And as usual, if you want to contact me, you can contact me at my Instagram, and that is sambora.00. So the Sambora family is growing rapidly on a daily basis with a little bit of help from somebody. You know who you are. Thank you very much. So it's grown rapidly, and that's a demonstration of the diversification that my approach to the market instills. Students are seeing that, they're wanting to come on board, and the family has grown, you know, almost 500 students now. Absolutely unbelievable, and it continues to grow on a daily basis. Thank you very much again, you know who I'm talking to. So I hope you enjoyed this week's video, and I'll see you at the end. £539, not bad for the Dow close. Okay, so here we go. It's been a while. So this is 236 contracts on the Dow Jones. Okay, so this trade actually lasts for nearly 25 minutes. So obviously I've had to edit the video to fit it into the actual YouTube video. You know, you can't have YouTube videos that last 15-20 minutes. So this is it's been edited. But again, this is heading towards the end of the close. So the close, I normally trade the close about 8 p.m. London time. Okay, but I've just seen an opportunity here to take this. So I've went in, and again, it's all to do with the characteristics that I associate with my entries. It's all based around the space that was previously created, the current price of the Dow, etc, etc. There's a lot of different elements to me taking this entry. Okay, so this is good. Okay, and again, you know, I keep saying, you know, there's diversification. So my approach to diversification, or my meaning of it, is trading all these different times. All right, not different instruments, trading all these different times. So, you know, I mean, look at that pullback there, lovely pullback. And again, what's gone up has to come back down. It simply has to. So again, it's about the space that was created and at what time it was created as well. Okay, so nice. So already 200 odd pounds up, lovely. So that's, you know, already just over 15 minutes in. So of course I can't continue to hold this for too long. Because at the end of the day, what's going to happen is it will reverse, and I'll end up, you know, not necessarily losing money, but, you know, taking less than what I could. So I'm just watching to see, you know, this is real price action here that's taking place at the moment. You can see them lovely bearish movements on them red candles. Yes, there is a number of rejections there, but I'll watch these rejections, and again, they tell me a story, but again, quite happy to hold this because of the historical data and what the historical data tells me. 88.13%, I will say that again, I'll put my teeth back in, 88.13% of the time, this does exactly what it should do. Okay, so I'll hold this, and listen, see at the end of the day, you know, if I close it and, you know, I break even, well, you know, sometimes you've got to risk that, you know, because when you risk that, you know, you can end up with a very, very good return. Now, when I say risk, I'm not going to risk any of my actual capital, because I would just close it out, you know, if it was like 50 or 100 pounds down. So it's not a massive loss, but it is worth the it is worth the risk, the small amount of risk, to get a greater return. So that's why, you know, sometimes you just know you have to risk a little bit of your capital, and at the end of the day, as soon as you open a position, you're risking your capital. And anyway, okay, so you've got to balance up that risk versus reward ratio, you know. And at this stage I've got so much experience at this stage. I'm not going to say I'm a master at it, but I'm very experienced, so I know exactly what I'm doing here, know exactly what I'm willing to risk, know what I'm willing to risk versus the potential gains. So I'll continue to hold this, and again, this is why I continue to hold it, because you know, them resistance movements are being rejected, and I'll just wait here and see. And this is it, you know. Sometimes you think to yourself, you know, certainly at my level, I can hold on sometimes a little bit longer, not necessarily at the opens, because the opens are much more volatile. This is heading towards the end of the session, so it's not as volatile, there's not as much volume, so I can take my time, you know. There's more time for you to make your mind up in terms of what you're going to do. You don't have that amount of time on the open because of the volatility and the speed of which the movements occur. But certainly the likes of this time of the session, you know, I can just kind of weigh my options up, and there's not going to be, you know, very fast volatile movements at this time of the session. So that's another good element of trading this time of the session, is it does give you more time to think about what it is you're going to do. And this is why I'm holding on. This is exactly why I'm holding on, because I'm expecting these bearish movements. Now listen, I'm not going to hold on for too much longer. You know, I'll just be greedy if I hold on too much longer. Now look, I will hold on a little bit longer because of them movements, look. But you know what, let's just take this, let's not be greedy.
So there you have it. And yes, I always say that. There you have it. There you have it. There you have it again. £539, the Dow Jones on the close. And again, you know, I talk about diversification. When I talk about diversification, I'm not talking about trading different instruments, okay? That's not what I mean by diversification. When I say diversification, what I mean is trading different times, so the European Open, US Open, US close, and then intraday swing approaches in between that as well. You know, if that space is being created, if there's a rally, if there's a significant sell-off. So that's what I mean by diversification. I only ever trade the FTSE 100 and the Dow Jones. Every once in a blue moon, I might trade the DAX. Okay, so that's what I mean by diversification. So don't misinterpret that. Okay, my approach to diversification is just trading these different times. So I hope you enjoyed this week's video. Next week again, we might be back in the kitchen, I don't know, or maybe the penthouse suite. Did he say the penthouse suite? Yes, he did say the penthouse suite. We might go back up to the penthouse suite next week. Who knows? So as usual guys, I will see you next week for more videos.